Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, if you want to be a part of this channel and ride this commodity bull market up with the channel, subscribe. Love to have you on the channel in this community. Give me a thumbs up for this content, and I'm going to go over Uranium Royalty Corp. I know some people they like this royalty company. I like royalty companies in general. I'm just going to do a quick kind of overview of Uranium Royalty Corp and some of the assets that they have. So you're going to get rid of me, go into Uranium Royalty Corporation, and just kind of go over what this company's about. The strategy there is the company accumulates and manages a portfolio of geographically diversified uranium interests that may be acquired directly from mine operators as well as third-party holders of existing royalties across the spectrum of project stages from grassroots to production. In evaluating such transactions, the company utilizes a disciplined approach to manage its fiscal profile. These are the company's royalties that they have. The projects are listed below: Roughrider, Dewey-Burdock, Anderson, Church Rock, Michelin, and Slick Rock. We'll go into each one of those real quick. So Roughrider, the operator is Rio Tinto. It's a development stage project. They've got about a 2% net smelter return. It's conventional mining in eastern Athabasca Basin of northern Saskatchewan. The Roughrider project is 100% owned by a wholly owned subsidiary of Rio Tinto. The Dewey-Burdock, that's Azarga Uranium Corp. Development stage in situ recovery method, 30% net proceeds in the Black Hills, South Dakota. The royalty currently applies to approximately 1,700 acres, or approximately 16% of the currently proposed permitted area, total of 10,580 acres, with an additional 1,227 acres of coverage outside such permitted area. Then we've got the Anderson. This is a UEC, advanced stage, conventional method, open pit, 1%, net smelter return in Arizona. 100% owned by UEC, was in production in 55 to 59. It's a large uranium resource. Next is Church Rock, which is Laramide Resources. It's a development stage, in situ recovery process. We do a 4% net smelter return. That's actually pretty good. Grants Mineral Belt, New Mexico. In January of 2018, Laramide disclosed plans to commence core drilling and leach restoration testing, complete an updated mineral resource estimate based on such additional exploration work, and complete a preliminary economic assessment for the Church Rock project. Then we've got Michelin. The operator's Paladin Energy. It's a development stage, conventional, 2% gross revenue royalty, Newfoundland, Canada. It's a weak uranium price. This project operates at a minimum activity and expenditure at a level intended to maintain the claims in good standing at the moment. So that's what that one is at. Until prices get higher, this probably won't go into development. And then we got Slick Rock. This is another UEC, advanced stage conventional, 1%, San Miguel County, Colorado. UEC acquired its initial interest in the Slick Rock project in 2010 by staking 88 mineral load claims that had lapsed and acquiring additional mineral load claims from individuals in consideration for a 1% royalty interest. Since then, UEC has further expanded the project through additional staking. So my final thoughts here: most everything in this portfolio is in a development or advanced stage. Nothing is currently in production, just to let you know. Mining companies need higher uranium prices for most of these projects to proceed forward. 2023 is when most uranium producers expect prices to really start moving because of the supply-demand imbalance. That was kind of their thinking. $30 uranium price is low. Most of these projects become profitable above $40 to $60 per pound, somewhere in that range. Perhaps this is a stealth way to accumulate uranium for a very long-term hold, as long as the mining companies can keep their heads above water for that long. Holding your company for future royalty streams is what this is about. So I think it's a pretty good proposition. You have none of the input risk costs. I like royalties in general. I think Amir Anani is the one that runs this guy. I know it's some people like him, some people are indifferent, and some people don't like him because of certain things that he's done. But overall, I think it's a good way to play it. And the projects, perhaps they'll develop these at some point, and this royalty company will do exceptionally well. But I know some people in the comments section, they wanted me to go over this, and this is what it looks like for the Uranium Royalty Corporation. So if you guys, let me know what your opinions are of it. Leave comments below if you like URC, that's the ticker symbol. And if you don't like it, leave it in the comment section. I'd like to hear your opinions. Thanks for listening. This is Finding Value.